Hi, so today we are going to do the last session for the chapter of salary. In this session, we are going to understand two fundamental concepts. One is Provident Fund and one is Motor Car Perquisite. So let's talk for each of them in detail. First, Provident Fund. There can be four types of Provident Fund. There can be Recognized Provident Fund, Unrecognized Provident Fund, Statutory Provident Fund and Public Provident Fund. What do I mean by recognized provident fund? So recognized provident fund are usually those funds which are approved by income tax officer. The rest of are unrecognized provident fund which are not approved by the income tax officer or income tax act. When I say statutory provident fund, the statutory provident fund are usually those funds which are made for the government or semi-government employees or the government of railway department or the employees of certain universities. And the rest is public provident fund. Public provident fund is not made for any specific employees. Rather, any person, even who is not an employee or who is doing business, can also participate in public provident fund. So these are four provident funds. Main purpose of provident fund is to collect the amount in installment from employee and employer, and at the end of his retirement, at the time of his retirement, the employee will get that amount. So let's talk about each and every provident fund and its taxability in detail. First, let's talk about recognized provident fund. Now we need to understand there will be three criteria. If I'm talking about any particular provident fund, first I will talk about the contribution of employee, then we will talk about contribution of employer, and then we will talk about the interest which we are gaining from the provident fund. Because what will happen? Let's say you are participating with an X amount in the provident fund. Now in usual scenario, the amount which you are investing, a similar amount or some different amount will also be invested by your employer. And that fund which is collected by the provident fund authority will be your fund, and hence you are gaining interest on the same. So we are going to talk about each three head in detail. First, in case of recognized provident fund, let's talk about employer's contribution. So any contribution made by an employer, but if that contribution exceeds 12% of your salary, in that case that will be taxable on you. So if I will say, let's say your salary is 1 lakh rupees per annum, up to 12,000 rupees if your employer is investing in the provident fund, that will be completely exempt. But if your employer is investing more than 12,000, let's say 15,000 rupees on behalf of you, in that case that will be taxable to you. In case of employee's contribution, that is your contribution will be completely exempt, as well as you will also get deduction under chapter 6A under section 80C. And if we talk about interest on that provident fund, so any interest up to 9.5% of the amount invested would be exempted, but interest over and above 9.5% will be taxable. Again, let's understand by an example. So on the amount invested in your provident fund, let's say you are earning interest. Let's say the amount invested is 1 lakh rupees, and now on that the interest which you are earning in this particular year is 10,000 rupees. Now that is 10%, right? 9.5%, which is up to rupees 9,500, it is exempt, but in this case 500 rupees will be taxable in your hands. Next, unrecognized provident fund. In case of unrecognized provident fund, employer's contribution will not be taxable yearly. Employee's contribution will not be taxable, however, it will not be eligible for exemption under section 80C. And in case of interest which is credited will also not be taxable yearly. That all will be taxable at the time of redemption of the fund. In case of statutory provident fund, whatever amount your employer is investing will be fully exempted. So employer's contribution will be fully exempted. Employee's contribution, again similar to recognized provident fund, will be exempted, as well as it will be allowable for the deduction under chapter 6A section 80C. And in case of interest, whichever you are gaining, there is no boundary set, there is no limit given for that interest. Whatever interest you are gaining will be completely again exempted. And in case of public provident fund, again public provident fund, employer's contribution will not be applicable, because that is something which usually done by businessmen, and even if being a salaried employee you are investing in public provident fund, that you are investing on your own, in that your employer will not be investing on your behalf. So there will be no question of employer's investment in public provident fund. With respect to employee's contribution, that is your contribution, that will be exempted as well as allowable for deduction under section 80C. And again, any interest you are earning, there is no cap given for the same. So the whole interest would be completely exempted. So that was about Provident Fund. Now let's move on to motor car perquisite. What do I mean by motor car perquisite? So usually there is a facility of motor car given to employee by an employer. Please understand that if employer is paying certain amount for the purpose of transportation to an employee, that will be part and parcel of allowances, not perquisite. Here when I say motor car perquisite, which means, be very clear, employer is giving a vehicle, employer is giving a car to his employee for his use. Now that can be personal use also, professional use also, but here employer is giving a car to his employee for the use. How the taxability will be determining that is slightly complicated. Let's understand each and every aspect in detail. So when I say motor car perquisite, in that first you need to see whether the motor car is owned by an employer or employee, which means who is the owner of that motor car. So first we are going to talk about if the motor car is owned or hired by an employee himself, if the motor car is of employee. Now if the motor car is of employee, in that case you need to then see that who is bearing the expense of that motor car, who is paying for the expenses of that motor car. Now again that can be paid by an employer or employee. So first we have seen the motor car is owned by employee. In that we are in the portion where the expenses are met by an employer. Now if the expenses are met by employer, in that case also there will be three sub-bifurcation, that for which purpose motor car is being used. Because the motor car can be completely used for the official purpose, or it can completely be used for the personal purpose, or in the most of the case which we will see in the future and practical life as well, that the motor car is partially used for official purpose and partially used for the personal purpose. So again, the car is owned by an employee, but the expenses are borne by an employer, and in that case if it is completely used for the official purpose, that will be completely exempted because the employee is using only and only for the purpose of his office or work only. However, if the employee is using that motor car for the purpose of personal use only, in case of personal use only if he is using, in that case whatever expenses are borne by an employer will be completely taxable. And if the motor car are partially used for official purpose and partially used for personal purpose, now in that case we need to see the engine capacity of that motor car, that whether the engine capacity is more than 1.6 liter or less than 1.6 liter, which means whether it is more than 1600 cc or less than 1600 cc. Now up to 1.6 liter, the amount which will be taxable is actual expense which is paid by an employer. From that, government has given the standard deduction of 1800 rupees. But if the driver is also provided by the employer, in that case 900 rupees will be again deducted, and the remaining of the amount will be taxable in the hand of employee. However, if the engine capacity is more than 1.6 liter, in that case whatever expense is borne by an employer, from that 2400 rupees will be deducted. Instead of 1800, now it is 2400 because the engine capacity is higher. And if the chauffeur or driver facility is provided, in that case additional 900 rupees will be deducted and the rest of the amount will be taxable in the hand of employee. So here we have discussed that if the motor car is owned by an employee but the expenses are borne by employer. Now let's talk about if the motor car is owned by employee and expenses are also borne by an employee. Now in that case please understand that thing, employee himself has purchased the motor car as well as he is paying for all the expenses of the motor car. In that case, for any purpose he can use, because the motor car expenses are also paid by him. The car is also purchased by him. So in that case, even if he is using for personal purpose, professional purpose, or both the purposes, there will be no tax liability in the hands of employee. That will not be considered as a perquisite itself. So I guess we are pretty clear with that part, that if the motor car is owned by an employee. Now let's talk about if the motor car is owned by an employer. If the motor car is owned by an employer, again in that you need to do the sub-bifurcation, that whether the expenses are borne by employer or employee. Let's say the motor car is owned by employer as well as the expenses are also borne by an employer. In that case, again three sub-bifurcation, that whether it is used for official purpose or personal purpose or both the purpose. If the official purpose, only for official purpose it is used, that will not be taxable, it will be exempted. But if it is used completely for personal purpose, in that case, whatever amount of expenses borne by an employer plus the amount of depreciation value or 10% value of the motor car per year, which means if the expenses borne by an employer for this year is 20,000 rupees, so that 20,000 plus, let's say the value of that car is 5 lakh rupees, so 10% of that 5 lakh, that is 50,000 rupees. So total amount taxable in the hand of employee would be 70,000. So here if the car is owned by an employer, expenses are also borne by an employer. In that case, what employee is going to pay the tax? The amount of expense which borne by an employer plus 10% of the value of the car. However, let's say if the motor car is used partially for the official purpose and partially for the personal purpose. So in that case, again we need to do the bifurcation of whether the motor car is less than 1.6 liter or more than 1.6 liter capacity. If its capacity is less than 1600 cc or 1.6 liter, in that case the amount which is taxable would be 1800 flat. Here we don't need to see whatever expense is borne. Here the taxable amount would be 1800 flat plus 900 rupees if the chauffeur service or driver services are provided by an employer. But if the capacity is more than 1.6 liter, in that case the amount which will be taxable will be 2400 rupees plus 900 rupees if the chauffeur services are provided by an employer. Let's talk about the last. That is, if the motor car is owned by an employer but the expenses are borne by an employee. Now in that case, if it is used for professional purpose, no taxability. Personal purpose, whatever the value of the car is, 10% of the same would be taxable every year. Here we don't need to see the expense. And if it is partially used for personal and partially used for official purpose, in that case again we need to see the engine capacity. If it is less than 1.6 liter, in that case 600 rupees plus 900 rupees if the driver capacity is provided, driver facility is provided. And if the engine capacity is more than 1.6 liter, in that case 900 rupees plus 900 rupees additional if the driver facility is provided. So in that case 1800 rupees per month would be taxable. So that was all about Provident Fund as well as motor car perquisite. And here we are also completing with the chapter of salary. Thank you.